Hey everyone! Welcome back to the channel. If you're watching this video, you're probably wondering about the battle of the health savings accounts. HSA versus FSA. Which one should you be using? And more importantly, what's the difference? Well, don't worry, because we're about to break it down for you. No complicated jargon, just clear, easy to understand explanations. You know, figuring out which one of these accounts is right for you can feel like picking between two superhero sidekicks. One's got cool features, but the other's packing some serious punch. But we're here to give you the lowdown, so you can choose your financial sidekick wisely. So before we jump into the details, if you like what you hear today, make sure to like this video, subscribe to the channel, and hit that bell so you don't miss out on more helpful financial tips. And hey, if this video clears things up for you, share it with a friend. They'll thank you later. Alright, no more waiting. Let's dive into the world of HSA versus FSA. First, let's talk about the HSA, which stands for Health Savings Account. The HSA is like the superhero of health accounts if you're looking to save for medical expenses in the long run. It's an account you can contribute to, invest in, and grow your savings tax-free. The key here is that an HSA is only available if you have a high-deductible health plan, also known as an HDHP, the type of insurance where the deductible is high, but the premiums are a little lower. So if you're someone who has that kind of plan, this could be your best friend. Think of an HSA like your healthcare piggy bank, but instead of just shoving coins in there, it's got some serious investment potential. You can contribute money to it, tax deducted up front, then use that money to pay for qualifying medical expenses. And here's the best part, you don't pay taxes on any of the growth. Let's break down the benefits of an HSA. Tax advantages. Your contributions are tax deductible, the growth is tax-free, and the withdrawals are also tax-free as long as they're used for qualified medical expenses. So you're getting a triple tax advantage. Talk about winning. No, use it or lose it. Unlike other accounts, if you don't use all the money in your HSA this year, it rolls over to the next year. It's like a snowball rolling down a hill. It keeps growing and growing year after year. Investment opportunities. Once you have a balance of at least $1,000, you can start investing your HSA funds, potentially growing your savings even more, which is perfect for those long-term medical expenses when you're, say, retired and trying to avoid an expensive hospital bill. But hold your horses, no account is perfect. Here's what to watch out for. High deductible health plan requirement. As mentioned earlier, you can only have an HSA if you're enrolled in an HDHP, so this isn't for everyone. Contribution limits. For 2023, you can only contribute $3,850 for individual coverage or $7,750 for family coverage. If you're 55 or older, you get a catch-up contribution of an extra $1,000. Yay for older folks. Penalties for non-qualified withdrawals. If you take money out for anything other than a qualified medical expense before age 65, you'll get hit with a 20% penalty. After age 65, though, you can withdraw for anything without the penalty. Just taxes if it's non-medical. So if you're looking for long-term health savings and you qualify for an HDHP, an HSA is a no-brainer. Now let's talk about the FSA. Next up, we've got the FSA, or Flexible Spending Account. Unlike the HSA, the FSA is more of a short-term option for those who want to save on healthcare costs, but with a bit more urgency. You contribute to your FSA pre-tax, and then you can use that money to pay for a variety of medical expenses. The cool part? Your employer offers it as part of your benefits package. So think of the FSA like a healthcare turbo boost. You put in money and it helps you speed through your medical bills, but you need to use it up by the end of the year or you'll lose it. It's like a use it or lose it game, but for healthcare costs. Here are some key things to know about the FSA. Tax savings. Like the HSA, you get to contribute pre-tax dollars, which lowers your taxable income. You also don't pay taxes when you withdraw the money for qualified medical expenses. Employer-sponsored. This is only available through your employer, and they're the ones who set up and manage the account. Wide range of eligible expenses. You can use FSA funds for a variety of things: doctor's visits, prescriptions, medical supplies, and even things like glasses or sunscreen. So you have flexibility in how you use the money. But here's where the FSA might make you think twice. Use it or lose it rule. If you don't use your FSA funds by the end of the plan year, you lose that money. Some employers might offer a grace period or allow you to carry over a small amount up to $610, But generally, you don't want to leave money sitting there unused. Lower contribution limits. The FSA contribution limit for 2023 is $3,050. That's lower than the HSA, so if you have more medical expenses, the FSA might not cut it for the long haul. So the FSA is great if you want to take advantage of tax savings for immediate healthcare expenses, but you'll need to use the funds within the year or risk losing them. No rollover here, folks. Now that you know the basics of both, let's do the ultimate HSA versus FSA face-off. Which one is right for you? Let's break it down in terms of flexibility, tax benefits, and long-term goals. Flexibility. HSA wins when it comes to flexibility. With an HSA, you can roll over the money year after year and even invest it for the future. It's perfect for people who are thinking long-term about their medical expenses, especially if you're planning for retirement. FSA is more for short-term needs, but you've got to use it by the end of the year or it's gone. No rollover here, unless your employer has specific provisions. Tax benefits. HSA wins on the tax front with its triple tax advantage. Tax-deductible contributions, tax-free growth, and tax-free withdrawals for medical expenses. FSA still gives you a solid tax break, but there's no long-term investment potential and the funds are more time-sensitive. Contribution limits. HSA allows for higher contributions, especially if you're 55 or older, making it a better long-term vehicle for saving. FSA, on the other hand, has lower contribution limits and you don't get the investment opportunities that an HSA offers. So, if you've got an HDHP and are looking for a long-term way to save for health expenses, the HSA is probably the better choice. But if you've got shorter-term medical expenses coming up or just want a quick way to save pre-tax dollars for the year, then an FSA might be what you need. So there you have it. The ultimate breakdown of HSA versus FSA. Both have their strengths and the choice depends on your personal situation. HSAs are ideal for long-term savings and growth, especially if you're looking to build a healthcare nest egg. FSAs, however, are great for short-term healthcare needs with tax savings, but don't forget about the use it or lose it rule. Before you go and start signing up for one, think about what makes more sense for your situation. If you're planning for the long haul, the HSA is probably your superhero. But if you need a quick financial boost this year, then the FSA might be the sidekick you need. If this video helped clear up some confusion for you, hit that like button, subscribe, and share this with your friends or coworkers who might be deciding between an HSA and an FSA. It's always good to have the info before making those financial decisions. Thanks for watching, and we'll see you in the next video. Now go out there and make those smart financial moves. Your future self will thank you.